Welcome back, investors, to the Investing with Our YouTube channel. Today's video is going to be summarizing the second week of December. Actually, before I start, apologies that I couldn't get a video out last week. I was a bit busy and these videos do take quite a long time to produce, so I just didn't have the time. So sorry about that. But we ended last week at 135,386 and we end this week at 131,957 for a 2.5% loss, which equates to £3,442. In terms of the week you missed, we were at 135,386 before that. So we did see a drop this week, but overall the portfolio has stopped its mass bleeding, which we saw for about a month. And one of the main reasons was that it was unlikely that we were going to get a rate cut. I think the market was putting pressure on the Fed to make a cut, which they actually did do this week. So this was something that was important that needed to happen, and it did. Now, I just wanted to make you aware that I hit a major milestone, which was completing my ISA for this current financial year, which ends in April, which is something I'm very proud of. I don't take for granted how beneficial this is for me as an investor, and hopefully I can do that again. But what that does mean is that I can no longer make any further deposits for the current financial year. And the next one begins in April next year. So I won't be able to take advantage of some of the natural dips that are going to be occurring in any normal market. So what I'm going to have to do is sell to buy. So I'm going to have to make trims on my portfolio to have cash available to make some buys, which I intend to do. Now, what that brings me onto is how I've been doing this so far. And these are all my sales for this year. And I've put my sales down and the reasons why I've done it. Sometimes I've seen opportunities in the market that I want to take advantage of. And for example, here are my rationales for why I've sold certain stocks. And as you can see, I've only had 3 major losses, which were for BHP, Rio, and Elgin. All were stocks which were part of my dividend focused portfolio strategy, which I had in the past, which I wanted to move away from, as we were in an obvious bull market, which has yielded really good results for my portfolio overall. If we go back, as you can see, as I moved away from a dividend focused portfolio, the curve within my portfolio really went up, as it's been a really good time for growth stocks. Eventually, I think I'm going to move back into dividend stocks once my portfolio gets to a certain size, but it's not at that stage yet. And I would like to essentially turbocharge it for this current period. So here we go. These are all my sales for this year. Now, the one that I'm really, really proud of is MSTR. Now, I pretty much sold at the top. So if you look at some of the tranches of my MSTR sales, which happened in June, July, and once in August, the prices I sold it for were $407, $398, and $386. And the current share price is $176.45. So as you can see, I've done really well on that. And I saw signs of this company, which when I did make the sales, I made videos about why I sold. And I saw that this company was going to have a tough time in terms of its share price. And I went over the reasons why in the previous videos. But this is one that I'm particularly proud of because the reasons for me selling turned up to be valid in the end. So the biggest win I've had so far is Google for a sale of £773 in October. And the main reason was it had a big run. So my average cost of Google shares is 162 and it got to 243. As you can see right now, we're at 309. So it carried on continuing, but I was happy to lock in that profit. And remember, with stocks, you're only down once you sell. So if a position is down, it means it can still recover. So you don't need to panic. But conversely, you only lock in the profit once you sell. So I was happy from going from 162 to 243. And I saw opportunities in buying Hood, United Health, and Meta for that portion of funds. Other highlights include selling Imperial Brands for a £646 profit. Now, this is an absolute beast. If you look at the overall position, I am up £3,517, and I've made quite a few disposals outside of this year, and we're still up over 75%. So let's have a look at the average cost of my position, and it is £18.01, and we're currently at £31.79. So this is another solid one. Now, AbbVie is one which I don't regret, but it spent ages just being flat. If we look at the graph for AbbVie, it spent a long time even slightly before this, just being quite flat. And I just saw other opportunities within the market. As you can see, so I sold at $186 and it's now at 223. So it has gone up quite a bit. And it's nice to see now that the stock is showing some share price appreciation, but at that time it just wasn't performing for a while. And with my portfolio, if a company doesn't perform for too long, then it does have risks of being trimmed or sold, because there's always nice opportunities out there in the market. So if you want, you can pause the video and have a look at all the sales that I've made. Overall, I think I've done quite well, and there are positions within my portfolio which I can further trim depending on where we see the market. So overall, that has equated to just under £5,000 in profit for sales made this year. So this is something I'm really proud of, and hopefully this will continue as my portfolio journey continues as well. Now, if you've enjoyed the visibility of my portfolio so far, please, if you can, give it a quick like so other people can see it, and it motivates me to keep posting, because these videos do take time, and it's nice to see the love from the community with some likes and some additional subscribers. Now, I intend, and I have been doing updates on what I trim and sell on my Substack. So if you want to see more or less live updates of when I'm trimming my portfolio and some of the rationale on why, I will be posting on Substack. So please go over there and subscribe to that. Now, if we look at the weekly profit and loss charts for my portfolio, as you can see, as we were down 2.5%, quite a lot of red positions. The strongest performers this week were Carnival Cruises, up 6.6%, and Visa and MasterCard, which both got upgrades from analysts, had a decent week, which were up 5%. And analysts are forecasting these will have some decent appreciation going forward. Now, the one that did do quite badly this week, even though during its earnings, it beat on earnings per share and revenue, it was Broadcom. And it was down just under 8.5% because it wouldn't give guidance for the full year. But my understanding is historically it doesn't do that. Their CEO generally does quarter by quarter revenue and earnings per share guidance. So this is something that's not new apparently. So yeah, this gave a decent buy opportunity for this company, which has delivered absolutely amazing results so far. It's actually beating Nvidia in terms of gains, and we were up over 100% before this sell-off, and we're still up 82%. If we look at the year so far, we're at just under 60%, and at one stage we were up way more than that. Now, if we look at the overall positions within the portfolio, still quite a lot of green, even though we had a lot of volatility and red within the market. Google remains my largest position, where we're up over £8,000. And if we scroll down, we see that the portfolio is still holding up well. It's nice to see Visa and MasterCard popping a little bit, which they've had quite stagnant years, even though they're phenomenal businesses. But hopefully they see a bid coming up, especially with the Christmas period. They do quite well. Tesla is the star performer, actually. Tesla is now overtaken Broadcom as the biggest performer within the portfolio, and we're up over 100% on that one for a 3.2k gain. It's one that I trimmed this year as well, as the valuation is quite high. Carnival had a good week, as you saw, up 85% overall. Nvidia having a little bit of a sell-off, and which for me is a buying opportunity, because AI boom is not going to stop, at least for the next 2 quarters, in my opinion. We talked about Broadcom, Oscar Health, just break even right now, and then now we see a little bit of red on United Health. Amazon up 18%, and then we have a tranche of red, which hopefully recover. Grab is talking about a potential merger with a company called GoTo, which is another major player within that area of Southeast Asia. If that happens, we should see this stock recovering. BMNR, with Ethereum being used more and more in terms of stablecoin projects, this one should recover, in my opinion. IREN, with the volatility that Bitcoin is seeing, is down a bit, but once Bitcoin recovers, IREN does too. HIM's down 35%, but they're launching in Canada. They're increasing their footfall in Europe and launching quite a few products. So this one will recover. It will take a bit more time because there's quite a lot of short activity on this stock, but it doesn't stop it being one that's going to do well in the future. Back to the green, and we've got Centrica up just under 50%, Apple up 40%, Costco up just under 10%, ASML up 27%, and KLA up just over 40%. So that's it. Just to summarize, we're on 131,957. Hopefully we see a bit of a bull run, which was due to happen in December, but hopefully now will happen January with the additional rate cut that came in. So let's see how it goes. Thank you very much for joining me in this video, and I'll see you on the next one.